In this video, I'm gonna clearly articulate the different types of markets, what cities go along those different types of markets, so you can get started investing today. And this is coming from someone who's been investing for 5 years, and I've invested in 5 different states around the country. There's plenty of areas that have positive cash flow, but because they have really high crime or very bad underlying economics, they end up being positive cash flow, but negative appreciation. What I would classify in this kind of market would be places like Detroit or maybe some of the, heavier crime areas in America. Put St. Louis in this category, that kind of thing. There's people moving away from these areas because there's high crime and there's not necessarily a large push for jobs. Now, it's also possible in these markets to find negative cash flow properties because they're overpriced and negative appreciation. So this would be bad deals in high crime, negative population growth cities. So this would be like bad properties in these cities. So for example, I invest in Akron, Ohio. Akron, Ohio has seen some appreciation, but I wouldn't call it a massively negative appreciation area. I'd call it maybe like a small negative appreciation area in terms of the appreciation side of things. But in terms of cash flow, I would consider it like a higher cash flow area, so it'd be somewhere around here. My objective with my portfolio is to retire my parents, so I need the positive cash flow. So that's why I'm making that decision. I'm making that trade-off. Every market you choose is going to have some form of trade-off. Then we have positive appreciation, negative cash flow. And over the last few years, this has been places like Nashville, Austin, Dallas, Phoenix, Las Vegas, Miami. These were all like secondary cities, but now they're starting to become primary cities, and they've had a lot of growth because people are moving there. There's new jobs entering a lot of these markets, and so it's bringing more money into the area, which is causing the prices to go up. Good luck finding anything that cash flows. So now you have this area here where you'd like to be in, but finding something all the way up here with really positive cash flow and really positive appreciation just basically doesn't exist. If it does exist, you're probably like a hedge fund person who's buying up a whole neighborhood. And so what we can do as everyday people is try to basically stay somewhere like in this range, which is maybe I will get some appreciation and some cash flow. So like I try to stay somewhere like in here. So I'll give you a few examples of this. This would be like right now in Austin, they just passed a law that basically said any single family house that's zoned for SF3 zoning, you could have up to 3 dwellings on the lot. Okay. So Austin already has, I think, long-term, a lot of positive appreciation going for it. A lot of people are moving there. A lot of new businesses are being headquartered there, taking talent from California. So it's going to force a lot of positive appreciation. But in 10, 20 years, as the job market there becomes more and more stabilized, I think rents will be able to increase, and so you'll be able to get some good positive cash flow. So if you buy one of these properties, that's a really good deal in Austin right now, when the market's down 30% in Austin, you find a really good deal and you get everything done properly, you might be able to make a decently good in terms of positive appreciation with very little cash flow play, because now you're able to build 2 extra lots. You can get 2 extra rental income from the property. So you might be able to get something that's pretty good appreciation, but very little cash flow. Maybe even slightly negative cash flow in somewhere in this range. So this would be a really good deal in any of these high appreciation cities. That's what I would call this. So you can choose, if you care more about appreciation, you might want to go down this route, which is choose some of these types of cities, ones that have a lot of these underlying factors or suburbs of these cities, where you can get the positive appreciation and try really hard to find a good deal in that area, which would give you some cash flow. Or you could try to find a good deal in the good pockets of some of these worse cities to be able to try to find the cash flow with some appreciation.